Hello everyone, my greetings to one and all. This is the 16th session on determination of income and employment. In the previous session, you have understood about excess demand that leads to inflationary gap. I am Poonam Vohra from Macroeconomics Learning Center, and in this session, you will understand what measures can be taken so that excess demand or inflation can be controlled. So let us begin. If there is excess demand in the economy, it results in inflation. So inflation has to be controlled. For that, aggregate demand has to be reduced by an amount equivalent to the inflationary gap. Aggregate demand can be reduced by reducing the money supply. In order to reduce the money supply, government needs to take various steps, which may include making changes in repo rate, reserve ratio, margin requirement, credit rationing, lending, or securities. To control inflation, money supply can be reduced when government raises the cost of borrowing from the central bank, which is done through having an increase in the repo rate. With increased repo rate, commercial banks are forced to increase their lending rates, which discourages borrowers from taking loans. It reduces the availability of credit and demand gets reduced. Next, reserve ratios may be either in the form of cash reserve ratio or statutory liquidity reserve ratio. Cash reserve ratio is the minimum percentage of net demand and time liabilities to be kept by the commercial banks with the central bank, whereas statutory liquidity ratio is the minimum percentage of net demand and time liabilities which commercial banks are required to maintain with themselves. So if there is inflation, if there is excess demand in the economy, there will be an increase in cash reserve ratio as well as liquidity reserve ratio, because these measures limits the credit creating power of because it reduces the excess reserves of the commercial banks, which helps in reducing the aggregate demand in the economy. Then is margin requirement. Margin requirement is the difference between the amount of loan and market value of security offered by the borrower against the loan. If this margin is fixed as, for example, 40%, then commercial banks are allowed to give loan only up to 60% of the value of security. So, an increase in margin requirement reduces the borrowing capacity and money supply in the economy. Then government may introduce credit rationing, that is selective credit control, under which central bank gives direction to other banks to give or not to give credit for certain purposes to particular sectors. So during excess demand, central bank introduces credit rationing to prevent excessive flow of credit. It enables to wipe off the excess demand. Central bank may also give advice to commercial banks to discourage lending in order to control the money supply. Then there may be open market operations, buying and selling of securities. So central bank may sell the securities during inflation. It reduces the reserves of commercial banks and decreases the money supply, as commercial banks will have to pay in order to buy the security. So all these measures taken together reduces the money supply in the economy and hence the aggregate demand in the economy, and is then helpful to control inflation. Now assess yourself. Here a piece of information is being provided. Clues are also given. You need to fill in the gaps with the correct term. I will read out this information for you. One popular method of controlling inflation is through a dash monetary policy. The goal is to dash the money supply within an economy by dash interest rates. This helps dash spending because when there is dash money to go around, those who dash money want to keep it and save it. It also means there is dash available credit, which can dash spending. Dash spending is important during inflation because it helps halt economic growth and in turn the rate of inflation. Clues given are contractionary or expansionary, reduce or increase, decreasing or increasing, reduce or increase, less or more, have or do not have, less or more, reduce or increase, reducing or increasing. So think over it and complete the information. Please recheck your answers. One popular method of controlling inflation is through a contractionary monetary policy. The goal is to reduce the money supply within an economy by increasing the interest rates. This helps to reduce spending because when there is less money to go around, those who have money want to keep it and save it. It also means there is less available credit, which can reduce spending. Reducing spending is important during inflation because it helps halt economic growth and in turn the rate of inflation. So far as fiscal policy is concerned, in order to control inflation, government needs to decrease the government spending because by doing so, there will be less disposable income in the hands of general public, money supply gets reduced, and there will be control in demand for the goods and services. Also, government needs to increase its revenues by having a rise in the tax rate. Both these measures results in decrease in the purchasing power of people and excess demand gets controlled. I hope you have understood the measures that must be taken in order to control excess demand or inflation in the economy. With this, the session comes to an end. The next session would be on deficient demand. Till then, keep reading, keep learning, also keep a watch over economic events that will help you to answer challenging questions.